Dear Mr. Buffett, what an investor learns 1,269 miles from Wall Street. Written by Janet M. Tavakoli. Narrated by Kelly Birch. Nobody was ever made by him, Claudius Maximus, to feel inferior, yet none could have presumed to challenge his preeminence. He was also the possessor of an agreeable sense of humour. Marcus Aurelius. Preface. In 2003, I moved from London to Chicago, my original hometown, and founded a finance consulting firm, Tavakoli Structured Finance, Inc. Sophisticated financial institutions call me when they have trouble understanding complex financial products, and in recent years the products have exploded in size and complexity. They also call me when they fight with each other over these products. As a result, my firm is a lightning rod for the myriad problems facing the credit markets. My client list is short and elite, and in one way or another, most of my business comes from my former employers. I created a niche business at the right time. Structured finance birthed a plethora of new products with acronyms such as ABS, MBS, CDO, and CMO, among other alphabet combinations. Reporters and television networks frequently ask me to make sense of market madness. I've made repeat television appearances: CNN, CNBC, BNN, Canada's Business News Network, CBS Evening News, Bloomberg TV, and First Business Morning News, on where I've frequently predicted problems long before the market or even the Federal Reserve acknowledged them. I've been quoted in major financial publications, including the Wall Street Journal, the Financial Times, Business Week, Forbes, Fortune, and Investors Dealers Digest, among others, in which I was often the first to publicly and specifically challenge major financial institutions, the Federal Reserve Bank, and the major rating agencies, Moody's Corporation, Moody's, Standard & Poor's, S&P, part of the McGraw-Hill Companies, Inc., and Fitch, owned by France-based Fimilac S.A. Beginning in 1985, I worked for various Wall Street firms in New York and London. These included Salomon Brothers, now part of Citigroup, Bank One and Bear Stearns, both now part of J.P. Morgan Chase, Goldman Sachs, Merrill Lynch, and others. I chiefly worked on trading floors, and most of my colleagues were men. My career travels took me to New York, Japan, continental Europe, and England. I traded, structured, and sold complex financial instruments. Although I often held management jobs, I was chiefly a hired gun. I took the jobs others considered too new or too difficult. I wrote finance books well known to users of esoteric financial products, with tongue-twisting names such as credit derivatives and collateralized debt obligations. 10 years ago, these products were limited to a small group, but now these products pose hot-button issues for investors ranging from very sophisticated banks to near-retail clients, including local governments, small pension funds, and condominium associations. I wrote articles for major financial publications explaining problems in structured finance and warned that it would not end well. I predicted the mortgage meltdown, the global credit bubble, and the collapse of investments backed by unwise mortgage loans. I warned about the risks of hedge funds using leverage including long-term capital management, LTCM. While the rest of the financial community tripped over themselves to extend LTCM credit, and later regretted it, I recommended cutting their credit. Along the way, I acquired fans and a few groupies. At a Washington, D.C. conference, a woman approached me in the ladies' room to ask me to sign a blank sheet of paper.
Sample complete. Ready to continue?